Neobanking and Digital Banking. Episode 4: Emerging Markets and Digital Inclusion. Banking the Unbanked. For 1.4 billion people, having a bank account is still a dream. No branch nearby, no credit history, no access to the global economy. But now, a phone, just a phone, is enough to change that. The unbanked revolution. Think about this: almost 1 in 4 adults on Earth is unbanked. They live outside the formal financial system. No savings accounts, no credit, no insurance, just nothing. And yet, these same people often have something else: a smartphone. That single device is unlocking an entire financial revolution, one powered not by traditional banks, but by neobanks and digital platforms. In places where cash used to be king, digital wallets are taking over. From Kenya's M-Pesa to India's Paytm and Brazil's Nubank, millions are gaining access to financial tools for the first time without a single brick of a physical bank. Kenya, the first fintech miracle. Let's start with Kenya, the birthplace of mobile money. In 2007, M-Pesa launched as a simple SMS-based service to send money between phones. No internet, no app, just text messages. Fast forward to today, over 50 million users, accounting for nearly 99% of adults in Kenya, rely on M-Pesa for everything, from paying school fees to buying groceries. It didn't just change payments, it changed lives. According to a study by MIT, M-Pesa lifted 2% of Kenyan households out of poverty, simply by giving people a safe, fast way to store and transfer money. And here's the key: it worked because it fit the reality of the users. No fancy app, no need for a smartphone. Just accessibility and trust. That's the essence of inclusion, technology that adapts to people, not the other way around. India, scale meets innovation. Now move to India, where financial inclusion became a national mission. In 2014, the government launched Jan Dhan Yojana, aiming to give every citizen a bank account. The results? Over 480 million new accounts opened in less than a decade. But it didn't stop there. Platforms like Paytm, PhonePe, and Google Pay India layered digital services, QR payments, savings, loans, even investments, over that new foundation. Today, India processes over 10 billion digital transactions every month, mostly through the UPI, Unified Payments Interface, a government-backed payment system that allows instant transfers between any bank or app, 24/7. It's not just fintech, it's a national infrastructure that shows what's possible when technology and policy align. Latin America, from exclusion to explosion. In Latin America, the story is just as powerful and more personal. For decades, banking in countries like Brazil, Mexico, and Colombia was expensive, slow, and bureaucratic. Opening a bank account could take hours or even days. Then came Nubank, ULaw, and Neon Digital, first banks that flipped the script. Nubank started in 2013 offering one simple thing: a free, no-fee credit card managed from an app. 10 years later, it's one of the largest digital banks in the world, serving over 100 million customers across Latin America. The impact: people who never had access to credit or savings suddenly do. A fruit vendor in Sao Paulo can now build a credit history. A student in Mexico City can receive international payments instantly. That's not banking, that's empowerment. Why inclusion matters. Financial inclusion isn't just about convenience, it's about opportunity. When people join the formal financial system, they can start saving, investing, and building a future. Businesses grow, economies become more resilient. According to the World Bank, digital financial inclusion can boost GDP growth in developing countries by up to 2% annually, just by giving people access to the same tools others take for granted. But inclusion isn't automatic. It depends on trust, infrastructure, and education. Because if people don't understand how to use digital finance safely, the same tools that promise freedom can also bring risk, scams, data theft, and financial dependence on platforms they barely control. That's why building digital literacy is now just as critical as building apps. Partnerships that scale inclusion. The most successful models blend technology, regulation, and collaboration. Take Nigeria, where OPay and PalmPay are expanding access to millions through low-cost mobile accounts, while the Central Bank of Nigeria pushes its own digital initiatives to ensure transparency. Or look at Bangladesh, where bKash now serves over 70 million users, partnering with telecoms, banks, and regulators to create one of the most inclusive ecosystems in Asia. In each case, success comes not from disruption alone, but from integration when fintech works with the system, not outside it. Conclusion: inclusion is the new innovation. Neobanks started by chasing convenience. Now, they're driving inclusion, rewriting what it means to participate in the global economy. And for the billions who've been left out, this isn't just a technological shift, it's a social revolution. Because inclusion isn't charity, it's a strategy, and in emerging markets, it's the biggest growth opportunity of the decade. Next time, we'll go under the hood to see how these digital banks actually work. That's episode 5, the technology behind the scenes, where we break down the infrastructure powering the new financial world. Subscribe now and join the journey.